The Federal Reserve just cut rates by 25 basis points, but the real story is in Powell's tone. Meanwhile, the US dollar is bleeding out, but most people don't see they're being robbed in slow motion. In this episode of Around the Block, we're going to talk about why inflation is far worse than you're being told, the bold prediction that puts Bitcoin at $10 million per coin, the two assets that seem to be emerging as the hedge against inflation, and whether we're on the verge of an epic alt season or if we're about to enter a bear market. Let's get into it. Let's take a look at what Powell said yesterday.
Everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you ultimately where do you think the bigger risk is?
Historically at the Fed, there's usually been more of a consensus, but right now, there is no consensus. No one knows what the right move is or where we are going next. And that's leading to a lot of uncertainty in the market right now, which we can see reflected in the price. But the thing most people don't understand is that fiat currency, by definition, is backed by nothing. And because of that, they will print more and inflation will always rise. The question is, how quickly? And I want to draw your attention to some very troubling data that shows the purchasing power of the US dollar over the years. Let's look over the past 95 years. In 1930, let's say you had $1 of purchasing power. By 1960, that same dollar only buys you 56 cents worth of goods or services. And fast forward to 2025, it is only 5 cents of goods and services. That is a 95% reduction in purchasing power in 95 years. Think about what that means for trying to save money. You literally can't save money. Trying to save money in dollars is like trying to hold an ice cube in your hand. It is going to melt. This graphic shows Bitcoin versus the US dollar in terms of its purchasing power. Bitcoin, although has had many big swings up and down, is basically a straight line up. While on the other hand, the US dollar has one spike, but other than that, it's straight down. This is the problem with fiat currency in its current form. We have the strongest currency arguably in the world. Even the strongest currency lost 99.9% of its value in the last 100 years. The debasement problem is clearly happening to every fiat currency on planet Earth. And I want to show you where investors are fleeing to. But first, let's listen to Jack Mallers talk about where he thinks the Bitcoin price and market cap is going in the near term.
You know, Bitcoin's compound annual growth rate over the last 5 to 10 years, call it 50% a year. An easier way to conceptualize that level of growth is it doubles every 18 months. People want to create a cash liquidity event with their Bitcoin without selling it, without having a capital event, a capital trigger on that. And so the fact that there isn't a market for them to borrow against it, for different credit products, lines of credit, termed loans, we think we can live in that space. We are shocked that this is a $2 trillion asset class going on what we believe to be 20 trillion and 200 trillion. And there are fundamental financial services that no one of our scale and size is focused on.
Did you hear what Jack Mallers just said? He envisions Bitcoin being a $200 trillion asset class, which would be about 100x from here, putting Bitcoin at nearly $10 million per coin. He also goes on to talk about how their company is looking to disrupt the traditional finance, lending and borrowing infrastructure that traditional finance has dominated for decades on end. The banks make money by lending it out and charging interest, so this is a major threat to their business model. Now, when a currency is being debased as quickly as ours, investors need to flee to assets they believe will store their purchasing power, and two of them right now are gold and silver. Look at silver futures hitting an all-time high today. That signals lack of confidence in the dollar. At the same time, we've got gold futures also hitting an all-time high. People have been fleeing into silver and gold, these rare precious metals, arguably for the same reason people believe in Bitcoin, which is that it's a scarce, hard asset. If we look at gold over the past month, it's up 2.19%, while Bitcoin is down almost 13%. If we look at the year to date, Bitcoin is down 3.68%, and gold, on the other hand, is up nearly 61%. This year, gold has dominated Bitcoin, and nobody can argue that. But let's zoom out a little further. Gold on a 5-year time horizon has gone up 133%, quite good. Bitcoin on a 5-year time horizon is up 378%, far outpacing gold. So why is Bitcoin lagging behind gold? I have a number of theories, and my main one is this. I think the big money is holding down the price. They are all starting cryptocurrency trading in 2026. Some are already there, and some have announced they're getting into it. They don't want to get a high price. They are too smart. They are going to manipulate the narrative and the price to keep it low so they can get in their positions before the price resumes its upward trend. I also think traditional investors don't fully grasp Bitcoin and its revolutionary properties, so they think of something like gold that's been around for thousands of years and say this makes more sense. However, every day, people are coming to the realization that something digital can be just as good, if not better, than something physical. Great example, newspapers, physical distribution of media. The internet, digital distribution of media. Netflix, digital distribution of entertainment. Blockbuster, physical distribution of entertainment. Which ones are more valuable? The answer is obvious, but it does take time to change the overall mindset of people. So the question on a lot of people's minds is, are we going to get a big bull run in the crypto markets, both in Bitcoin and altcoins, or has the ship set sail and this is the beginning of the bear market? I want you to listen to what Jerome Powell has to say.
Alts are driven by the business cycle. So with the business cycle currently low, we haven't had Altseason. And everyone's like, I can't believe they've robbed us of Altseason. It's never going to happen. There's too many tokens. We can't have nice things and all of that bullshit we hear all day. It's not. It's just the economy's stupid, because what happens is when earnings go up, when the business cycle is strong, you have more earnings and you invest those earnings further out the risk curve. It's just really basic stuff. It happens for exactly the same as small caps, exactly the same with junk bonds, credit. They all operate in exactly the same way, and the business cycle has been subdued.
So what we're hearing here is that Powell believes the business cycle is what's going to control the price, not this 4-year halving that we've all believed in for so long. Now, typically with lower rates, money will find its way into risk assets, which Bitcoin, unfortunately, is considered a risk asset, although I believe it is a safe harbor on the long time horizon. But altcoins are most definitely, I think in everyone's opinion, a risk asset play. And if the money begins to flow into Bitcoin, historically what's happened is Bitcoin has risen and risen and risen. And eventually, when it hits all-time highs, the money begins to flow downhill. It will flow into the majors, things like Ethereum, Solana, etc. Then it'll find its way into smaller caps and eventually into the very tiny alts. If that takes place, when Bitcoin's at 150, 175, 200, I predict we will have an absolutely incredible alt season. And if that happens and you are positioned properly, it could lead to generational wealth. I kid you not. I have literally made and lost millions of dollars during alt seasons, which is why I understand this is an asymmetrical risk in my opinion. Positioning yourself now could lead to generational wealth. It could go to zero, no question. However, if you have a high risk tolerance and you're interested in learning more, I urge you to dive in deep and figure out where these opportunities lie. And if you want some help, you can schedule a call with me or my team. We specialize in helping accredited investors and business leaders master the world of cryptocurrency and decentralized finance. In just 6 weeks, we can take you from a novice to an absolute pro. So just scroll down below and schedule a call with me or my team to see if you're a good fit. Now I'm curious, I want to hear your opinions. Where do you think the market's going next? Have we hit the peak? Was 126 the absolute peak? Or are we resetting like we have in normal bull markets and we're ready for the next leg up? Drop your comments below. I'd love to hear them.